Hey, everybody. We are so excited to have Kent Ritter on the show. Kent, welcome to the Tech Guys Who Invest podcast.
Thanks for having me, guys. It's great to be able to chat again.
Love it. Well, Kent, we want to start with really understanding your background. I know you got a great story of going from corporate to America to investing, but of course, I don't want to steal your thunder. So I'd love to hear it directly from you.
Yeah, no, happy to share. I started out my career as a management consultant and, spent as a management consultant, what you do really is you fly around the country and you help companies solve big problems, right? So with that, you're spending a ton of time on the road. That was cool when I was single and it was just me. But once I started having a family and had a couple of kids, it just really didn't fit the lifestyle that I wanted. Didn't fit. I didn't view myself being able to be the kind of husband I wanted to be the type of father I wanted to be, being gone all the time. So I really started looking for a path to just that, just be. I was looking for really the ability to have flexibility with my time more than anything else, to be able to be with my kids when I wanted and be able to go to the soccer games and the ballet recitals and all that good stuff, right? So that was kind of what really was one of the major factors in shifting my focus and my journey. And so in 2015, by this point in my career, kind of 12 years into being a management consultant, I had actually started my own business with several partners as a boutique management consulting firm. And in 2015, we decided to sell. And so from that exit, I had some capital and I didn't really know what I wanted to do with it at that point. I felt like my journey was kind of over. Like I had accomplished what I had always set out to do. I wanted to be an entrepreneur. I wanted to be a business owner, and I'd taken it from start to finish, right? And so I was looking for what to do next. I knew I didn't want to have all my eggs in one basket. I didn't want to put all my money in the stock market. So I started looking for other things to invest in. And I looked at different alternatives, and really real estate stuck out to me as the best place to place my capital to continue to build wealth and also create some passive income for myself. So I started, just dug in, started investing in real estate, started as a passive investor, started out in 2016 by investing in 10 deals with a few different sponsors, just to really understand the process, and just really fell in love with it. And the more I learned, I got a couple of mentors, I did a couple of education programs. The more I learned, I just felt like multifamily real estate just made so much sense, all the benefits that it brings. Um, and just felt like, I found this new passion, right? This new calling that I felt like I was excited to go to work again, and really set out on the path to become an active investor in multifamily. And it took me till about 2019 to when I did my first active syndication. And from there, through 19 one, and then three more in 2020, and now I'm on my fifth that we have under contract right now, actually. So just been continuing to grow and kind of rinse and repeat now that we have a model that's really working for us.
That's awesome. What a journey. Do you remember how you first discovered real estate? Because what I think super interesting as someone who's currently in the corporate world are all of the different viewpoints when you talk about real estate. You've got some people who they get it and they themselves invest in some way
Hmm.
passively most of the time. And then you've got others who are aware of it, but they don't know that much about it, not enough to invest or even realize they can. They sort of think that the 401k is where they're supposed to put their money. And then you've
Right.
got some people who are just outright afraid of it. They're so ignorant of how it works that they think it's risky and they're
Right.
scared of it. And you bring it up, you're like, oh my gosh, I would never invest in that. And do you remember what that felt like back then, and kind of how you found out about it?
Yeah. So I think that's a great way to like categorize the different ways people think about real estate, because you kind of hit the nail on the head with all the different types of people. So I was basically I had been a very active stock market investor, even as I was working. I was a finance major in college. I concentrated on investing. I was always really into the stock market from an early age. But I knew that with this kind of this chunk of money that I had now, like I didn't want all my eggs in one basket. Like I didn't want to have everything. I didn't want to lose everything on the whim of, Facebook goes down 30% overnight, and all of a sudden, my nest eggs cutting into 2/3, right? So I knew I didn't want to be there. I didn't know exactly where I wanted to be. So I started just doing research, and actually I started just finding podcasts. And my father-in-law he owned he owned 4 storage facilities, self-storage facilities.
Nice.
And he also owned some rentals. And so, I got talking with him. He connected me with a family friend who was a commercial lender. And then they hooked me up with some opportunities. I started out actually with I think Kevin, what you focus on is like note investing, right? I started
Exactly.
out building a note portfolio at first, and doing houses on contract. And then what happened was like a year later, one of those houses sold, and I got the HUD statement because I was on the debt, and like I was getting my loan paid back, which was cool. But that guy just doubled his money because the value of the house doubled in like a year. And so I was like, man, I want to be on the other side of this. Like I want to start buying assets. And so that set me down that path. And then it's like kind of a traditional journey of, well, I didn't go single family first. I almost did. The reason I didn't is because I had a friend who had like 40 single families. And like whenever I would meet up to talk with him, he just complained and bitched like all the time about his single families and being a landlord. I'm like, well, that doesn't sound any good. I don't want to do that.
Not at
And
all.
luckily I had gotten connected with a mentor at the time who was in multifamily, and who kind of took me under his wing and showed me all the benefits of multifamily. And then as I continued to re-educate myself, it was just like a no-brainer. I knew I wanted to be in multifamily. I knew that was the place to really grow and scale. But I had these like almost moments of like almost buying an office building, which like, man, glad I didn't now, and like almost doing these other things, but luckily landed into multifamily, and yeah, the rest has been history.
It's
Love
interesting,
it.
man.
I love it.
Yeah.
And like to the point of really believing in this, like I try to tell people, I'm like when people ask me, well, like, is it risky or whatever, is it a good investment? I'm like, look, like I've literally like created a second career, like a second calling for myself doing this. I've dedicated my life now to investing in multifamily real estate. So like if I didn't believe in it, like I wouldn't be doing that, guys. And like to the tune of, we were talking a little bit before this of like, I told you guys, we moved and downsized our house. Like we moved into a house that was half as much of the house we were living in. That, by the way, we spent 2 years building, like the perfect dream home. Like this house was supposed to be like the monument to my success, right? And
Your
because I felt like
legacy.
my legacy, I felt like I was at the finish line. And then again, like through good mentorship, I kind of had this. Well, one, I got kind of bored. Two, good mentorship to be like, man, you're 35 years old. Like, what are you doing? You got a lot of room to run here. Like, you're not done yet. And in finding real estate, I really realized that. So we sold that house and bought a house that was half as much, and took all that money and I invested all that in real estate and put all that to work. Cause I had all this equity stuck in this house. It just wasn't doing anything for me. It's like, I didn't need all this fancy stuff. I didn't need a monument to my success. And now I'm able to just, one, have so much more financial security. I cut our mortgage by like $2,000 a month, and freed up a lot of other expenses. And then two, just the ability to go out and find good opportunities and have the capital to invest and like make things happen. Like I'm building like these 5 townhomes now, like in downtown Indianapolis, and I'm building it all myself. And I couldn't have done that without having the capital to be able to do that. So just creating these cool opportunities by just having the resources to do that.
Man, that's really cool. And I think it would surprise many people who are climbing the ladder in corporate America, and maybe they don't even realize sometimes where they are. You kind of get
Yeah.
sucked into that, lost in that. And it's always, well, I'm making more, so I've got to get the bigger house, get the little bit
Yeah.
nicer car, make sure everything's new, show everybody I'm rising. And it's sort of interesting how, in a way, it makes them feel more secure, like I'm earning more and able to show that off, but they're
Hmm.
actually financially making themselves less secure because they're getting out of balance in that one aspect. And then someone like yourself does the opposite. You downsize and you're so much more secure now. You've taken that money and invested it in
Mhm.
assets that pay you. It's brilliant. I love what you've done.
Yeah, I mean, it's not, it's just like it's smart when you say it, right? It sounds smart, but it's pretty counterintuitive, right?
Right.
And I think that, my mindset has changed so much in the past couple of years, and real estate investing is honestly the reason for that. I mean, the people that I've been around because of the investing that I'm doing is the reason for that. But it just, I didn't realize how caught up in that I was, and that I
Mhm.
cared about, driving the Audi and having a nice car and doing all this. And I mean, I'll tell you, like, the other thing I did was I ditched the Audi and I started driving my wife's, like, we had to get a minivan because we got 3 kids. I started driving my wife's old car. It's like a 2010 Lexus SUV, but it's like, so, like, again, just not caring about all the
Right.
material stuff. Right. And just, just being happy. Like, that's not what makes you happy. It's not what makes you happy. And I think that's how I matured, is realizing, like, the things that make you happy is the freedom to feel secure, the freedom to have the time with my family and my kids, the freedom to be able to do the things you want to do, the trips or the, events or whatever it is. And I mean, that's what makes you happy. And like, real estate is a great vehicle to, like, real estate's not the end all be all, right? Like real estate is a vehicle to allow you to have those moments, right? To have that freedom to be able to have those moments.
Fantastic. And as you're talking about, right, that downsizing, if you want to buy those nice things, sure you can, but know that that will put more of a put you in a bind where you're going to have to invest more to get more to buy that time back. Whereas
Yeah.
if you keep your expenses low, you're not only buying yourself freedom, you're buying your time as you're continuing to invest. So I love that mentality.
Yeah. And it's also fleeting, right? Like, you get a new fancy car, you're excited for like a week or two, right? And then it just becomes your car and it's like normal. And it's just, and then
Yeah.
you got to get a better one, and you got to get a better one, right? And then your neighbor gets a fancier one. You got to one up them. It's just like, none of that's real. It's all just so fleeting. It's like just getting to the stuff that really matters and focusing on that. And yeah, I mean, that's what life's all about. And I'm honestly just so much happier now.
So
That's
cool to
fantastic,
hear.
man.
Yeah, it's great. And you know what's amusing? These are lessons that me and Kevin have learned through playing Robert Kiyosaki's cash flow game. So
Hmm.
before the pandemic, Kevin and I did a live event regularly in Tampa, and we would host the cash flow game for free and teach
Nice.
people principles about it. And this is one that I definitely learned early on. And by playing that game, I was really able to see how if you eliminate that kind of stuff, which they call doodads in the game,
Hmm.
it allows you to get out of the rat race so much faster because your expenses are lower and the assets you buy will overcome those expenses faster than if you have a lot of expensive stuff. It's kind of cool.
Yeah. Yeah. I mean, there's like two ways to reach financial freedom, right? It's make more money or spend less money. And if you can
Yeah.
do both, then you're just doubling down, right? You're just, I mean,
Exactly.
you got to hit both sides of the equation, right? And that really amplifies things.
So I feel like we're talking a lot about lessons learned over the investor journey, and I know you've got a lot of doors, or a lot of property, and I'm curious some of the lessons that may stand out to you that we haven't talked about yet from owning so many of those.
Yeah. Yeah, good question. So one of the ones that I just hope to debunk, and so I just talk about it as much as possible, is like, you don't have to go big to be successful. And like, what I mean by go big is, like, you don't have to go out and buy 100+ unit, 200 unit apartment building to be successful. Like, I know a lot of people that have great incomes and live very comfortably, that own, 10 plexes and eights and sixes and fours, And so what I would say is, like, don't worry about going out and buying 100 unit, and in doing that, basically jumping into the most competitive place in the market, like, to start. like just get started. And honestly, it's a lot easier because there's a lot less competition to start in some of that smaller stuff, but you're going to learn great lessons about how to manage properties, you know, how to do asset management, right? How to hold property managers accountable or even manage yourself. Like you're going to learn a ton. So, and you're going to create really good income too. So like that would be my biggest thing is like, I just hate to hear like people sitting on the sideline because they're like, oh, I can't find a 200 unit property. I can't find a 100 unit property. It's like, buy a 20, buy a 30. Like it's still great cash flow. Like you'll be fine.
Yeah, but it doesn't look as cool as, hey, I closed on 100 units.
Yeah, but it's also like, yeah, and I get it. And what we've talked about from the beginning is like, you know, I don't care about looking cool anymore, right? Because
Right.
like I've got a 30 unit, 30 units killing it. I got a 50 unit, 50 unit is killing it. These properties, honestly, small properties have more meat on the bone and the return profiles are better than the big stuff. I mean, the big stuff's great because there's pros and cons, right? So not to say the big stuff's bad. The pro is you can have on-site management and that makes life a lot easier. When you have smaller stuff, you got to find creative ways to manage it. And we've leveraged technology in many ways to do that with like smart locks and self-guided tours and cameras on site and different things. But if you can crack that nut, I mean, the returns are better. So there's, you know, there just the thing I want to debunk is like, you don't have to go big. You don't have to start at 100 units.
Now, it's kind of funny because Kevin and I were just talking about this week. The whole concept, not just in terms of the asset, but even in terms of your goals. You know, a lot of times it's easy to get caught up in going big, and
Yeah.
if you were honest with yourself, you may realize actually for you, that may not be what will be the best thing for you. So I think the
Right.
important thing in all that is just be honest with yourself and what would be
Right.
best for you. And I love what you're saying about that's a great way to get started.
Well, because the other thing, yeah, the other thing to think about is like if you're gonna syndicate and you're gonna take on other people's money, I mean, like you better really love real estate because like I mean it's a lot of work and you have to take it seriously if you're taking other people's money, right? Like you have a fiduciary responsibility and beyond that, you should just like from an integrity standpoint feel like that's the right thing to do. But you got to recognize, you got to think about like, yeah, it sounds cool to be a syndicator. I think it's flashy, but like, are you willing to put in the work to do that? Cause like I work more now than I did in my corporate job. I just like what I'm doing better, you know,
Yeah.
but it's a lot of work. So to your point, does that align with your goals? Like, is that the lifestyle that you want? Right. If you want to be more passive, like don't become a syndicator, you know?
Very, very good point.
So
I love
true.
Um,
that.
you know, and yeah, so yeah, I think that I think goals are super important to understand, and you got to start with your goals and kind of go back to your goals. Also, like when you hear a lot of people talk about, you know, oh, I've got so many units, right? It's like, but if you're a syndicator and you're a small part of the GP, like you might have like I don't know, like 0.5% of a ton of units and like and that's fine, but you can crack the same egg by having, you know, 50% of, you know, way less units, right? Like you can make the same amount. It's like and honestly that can be a lot easier and you may not have to bring in other people's money and you may, you know, be able to manage it on your own and just find a different path. So I think that you know, there's just a lot of different ways to go about it, but any way you go about it, real estate's a good thing to be invested in.
Yeah, and I like what you're saying, Kent, about I mean, I think kind of the bottom line of what you're helping folks with is get started. Don't let excuses stop you from getting started
Yeah,
and just move forward, take action. And I think that's the important thing there because so many people kind of, you know, have those self-sabotaging thoughts and they come up with all the excuses in the world why they can't get started. It's, you
that's
know,
right.
it's important to just move forward, take
That's
some
right.
action.
And yeah, I think a lot of people like us and definitely me, I won't speak for you guys, but probably you too. I've got like this competitive streak where like, you know, I see and it's like it's just social media, right? You see people and you're like, oh man, that guy's got like 4,000 units, that guy's got this, right? And
Right.
it's like, and I think people get caught up in that and they're like, that's why I was like, oh, I gotta go big, I gotta do this. yeah, I think that actually limits a lot of people from getting started, and like doing your first deal is a game changer. You do your first deal, and then from there things just start to snowball, and
Yeah.
it really is the truth. And so, yeah, absolutely what you said. Just get started.
Absolutely. You can't just sit and getting started may be something small, but just getting started and not being overwhelmed with analysis paralysis. And carry on from the lessons, Kent, what would you say are your favorite lessons from the guests you've interviewed on your podcast?
Man, that's a really good question. One of my favorite lessons that kind of continuously comes up is about how do you, I guess it's like what to look for in a sponsor. If you are someone who is looking to passively invest with someone else, like what should you look for? And I did an exercise, and it's a freebie on my website right now. If you go to kentritter.com, you can check it out. But what it is like from the first 40 episodes of my podcast, I distilled a bunch of these answers of like what is important in choosing the person that you're going to invest with. And it's kind of the top four things that have bubbled up from people's responses. And it's first and foremost, it's integrity. You got to have, I mean, everything starts there. If you got to have a sponsor that has integrity, right? And it's willing to do the right things when it's not easy, right? So like when it's going well, it's easy for everybody. When it's not going so well, you want a sponsor who's going to do the right thing by the investor. Two is track record. Three is skin in the game. So in any investment that I make, I want to hear that the person that's pitching it to me is also investing in that. I just don't like the idea of like, hey, you should invest in this. I'm not going to do it personally, but like you really should, right? Like that's not a pitch that would win with me. And then the last one is just financial means, because I think like as a syndicator, as somebody who's going to take on other people's money, like you have to have a certain amount of financial means for two reasons. One, if you don't, then your main incentive is to get fees, right? Because you probably need those fees to pay your mortgage and feed your kids and these things. And if you're incentivized to get fees, your incentives are not aligned with the investor, because you're incentivized to just do the next deal that's in front of you, not do the next deal that's right for the investors, right? And then two, you got to have the financial means, because if things do go south and we go into a recession and you're in a negative cash flow position for a couple months, you got to be able to ride that out. And really that's the syndicator's, I think, responsibility to like ride that out and make that work and get to the other side. And if you don't have the means to do that, then you're not going to be able to, and you may lose the deal, which again
So
hurts the investors.
yeah, Kent, about your podcast. Great podcast you have there, Ritter on Real Estate. For those of you listening, you might want to go check that out. It's a really good show. Tell us about the show. Who's your main audience? Like who listens to your
Yeah.
show?
Yeah. So the tagline of the show is passively invest like a pro. So it's really targeted at folks that want to passively invest. A lot of folks that have day jobs, right? But know the benefits of real estate. People that a lot of them like what they do, like oddly enough, and I did at one point. I just kind of got burned out, at the end of the road. But people that like what they do, but they just want to invest in real estate, or people that are looking to invest or understand how to invest because they want to get out of the rat race, right? Those are a lot of my listeners. And so I really try to focus on my show on like, how do you make sound investing decisions? What are the things you need to understand about a sponsor or markets or underwriting? Like it's probably a little more nitty gritty. But I really want to help people make good decisions, because I want people to not make the same mistakes that I did when I first started.
Fantastic. When we talk about the management consulting aspect, what did you garner from it, and what carried over from your skills that you acquired there to invest in real estate? Because where we're coming from is we preach that, hey, you have skills from your 9 to 5. How can you use that to create freedom for yourself or security? So I'd love to hear from your perspective from a management consulting.
Yeah, absolutely. No, I think a lot of skills I learned. I mean, as a management consultant, you're essentially managing change all the time, right? And nobody, as humans, we do not deal well with change. So you have to, it's a difficult thing to master. So you're managing change, you're managing projects, and you have to be a very effective communicator, because you're typically trying to get people that are not bought into what you want to do what you want to do. And so those are the three skills that I really developed as a management consultant and got very good at. And it's why I was successful as a management consultant, and I think also successful as a real estate investor, because the ability to just be comfortable with change and to help others manage through that change, right? If you're going into a project, you have a big rehab going on, right? You need to help property management think differently about what they're focused on, right? Let's not focus on occupancy so much. Let's focus on revenue. Um, Managing projects, like, so every real estate transaction is a project, right, in and of itself. And so just managing the project and be able to keep everybody on task. And then communicating well is, I mean, just everything in life comes down to communication, right? Like, it's so important. And just being able, there's so many people involved, right, in these real estate transactions and even in the day to day, that you've got to be an effective communicator. You got to keep everybody in the loop. And it's all, my job really is, developing the strategy and then making sure that that strategy is realized. And a lot of that is making sure that I'm communicating effectively to make sure people understand the goal and the vision, and that I can keep them on board to all keep rowing in the same direction. And if I can do that, we're going to have a successful investment, right? Because I'm not doing a lot of the day-to-day work, but the property managers are, the construction team is, right? The asset managers are, like, and so it's my job to make sure that they know the vision and that we're all aligned. And if we are, we'll be successful.
That's great. So, Kent, I know a lot of us invest for cash flow, and whether it's active or, we've talked about passive investing. I'd love to hear your thoughts on how cash flow can either free someone up from a 9 to 5, or if they're one of those folks you mentioned who love their job and maybe they don't have plans to leave. What can cash flow do for them? Why would they invest that way versus in something that may give them a lump sum?
Yeah. So there's a lot of benefits to cash flow. There's a lot of like positive sides I could think of, but like one of the most important is, like, you need a plan B, because that corporate job that you have is not as secure as you think it is. And I've been on the other side of that. I've been a corporate executive. I've been in the meetings where all of a sudden it's a bad quarter, and the first thing is, well, how can we cut expenses? Oh, payroll. Okay. And it's not a fun place to be. It's never how I wanted to run, the business, or a business that I was involved in. But sometimes you have to make tough decisions. But the reason I say that is because, like, I see over and over again, I think people are too loyal to their employers. I try to help my friends with this all the time, of like, look, like, I know you think that, like, because you're pouring your heart and soul into it, I know you think they're giving it back, but at the end of the day, it's numbers. And as soon as the numbers aren't going in the right direction, they're going to look for ways to cut. So all that being said, not to be negative Nelly over here, but you need to have a plan B, because you never know. Right. Like, a lot of people got laid off in the past year, right?
Right.
People that had cash flow, they were like, all right, maybe I'll find something else. Maybe I'll take a little vacation. Maybe I'll pursue my passion. Right. People that didn't, I mean, they were sweating it. And so that's like one of the most important reasons, is like manage your own downside. Um, the positive aspects of cash flow is just the ability to supplement your income, to have more freedom to do what you want to do. Maybe it's take that extra vacation. Maybe it's not just take your family, but take you and all your extended family on that dream vacation, right? Maybe it's pay for your kids' college. Maybe it's actually retire, so I don't know if you guys know this, but like 401ks don't work. Like, if you're socking it away in the 401k, you're basically saying, all right, I'm going to defer my fun until I'm 70, when I'm too old to have fun. And then I'm going to build up this lump sum and hope that I die before it runs out. And that's not the way that I want to live my life. And what they're finding out is like, because the people that like, the people that when 401ks first started are like now just starting to retire. And what they're finding is folks don't have enough money to live through their retirement in a comfortable way. So all that being said, so it's supplement your income, build more income, build income streams that don't stop when you retire. Right. I mean, I think that's critical. Um,
Absolutely.
I had a mentor of mine say, like, what are you doing to pay for your kids' college? And I said, oh, I invest in, I'm putting money in a 529 plan, blah, blah, blah. We're saving. He's like, no, totally wrong. Totally wrong. He's like, you need to buy. He's like, or what he said actually was like, okay, here's what I did. He goes, I went out and I bought a fourplex. And he like gave an example. He's like, I named this fourplex Bobby, and this one Susie, and this other one Billy. And that's how I'm paying for each of their college. And he's like, you're buying assets that create cash flow and appreciate. And in doing that, you're investing to pay for the things you want instead of saving. Because once you save and spend it, it's gone.
Absolutely.
Yeah, after college, that money keeps rolling in on those fourplexes. So
that's right. Exactly.
Nice.
Yeah. So we wouldn't be the tech guys who invest if we didn't ask you a technology question. And what would you say is a piece of technology that's made your life easier, since you've started investing in real estate, or even when you were management consulting, just any piece of tech?
Yeah. Well, one is self-guided tour. So the ability to allow people to go and tour a property without having to go with a leasing agent or a property manager, right? So our folks can actually, or our prospects can actually go online. They can schedule a tour on their own, and they can go and they can do that. It's all guided through an app and through the smart locks we have on the property. But essentially, the people will schedule a tour. They show up to the property right before the tour is scheduled. They receive a one-time code to their phone. They hold their phone up to the lock. The lock opens through Bluetooth on their phone, and they can use their phone to access all the different areas of the property. And then what actually happens is through the app, there's a curated tour of the property on their phone. So there's geolocation beacons in the property. So it knows when the person like walks up to the fitness center, it knows you're there. And it's like on your phone, it's like, welcome to the fitness center. Here's all the great stuff about the fitness center. Like it's really cool. It's really a curated thing. And it's actually professionally voice recorded. So you're not just reading it, you're hearing it. So it's like
awesome.
The idea is you can have like your best leasing agent on their best day, giving their best pitch every time. Wow. Right. And you're able to do it. The prospect is able to do it on their own schedule. We've been able to increase our leasing hours to 8:00 in the evening versus just when the office is open. Right. And it allows people to do it on their own schedule. Cause most people like it's awkward, right? When you have somebody following you around while you're like trying to look at an apartment, like it's an awkward experience. I've done it myself. So when you can go on your own time and do it I think it's just a much more pleasurable experience. So I think that's the coolest tech that I've implemented in like the last year.
That's a great pro tip too.
Yeah, it is. I mean, that's really good. That's a really good piece of tech. Sometimes when we ask that question, we'll get something that's kind of, and then sometimes we'll get some pretty cool ones, but I really like that. I think that's pretty awesome. So
good.
Kent, thanks so much. This has been great having you on, and we've really, really enjoyed it. You've added a lot of value to our listeners. Now, if people want to find you, get in touch with you, how can they do that?
Yeah. So you can go to kentritter.com and you can check me out there. It's kind of my home base. You can see my podcast from there, blog, and I've got some passive investor resources like the one that we talked about earlier, the 4 things you should look for in a syndicator. The other thing you can do is check out my podcast, like we talked about, Ritter on Real Estate. And we come out with new episodes every week. And lastly, if you want to get a hold of me directly, you can find me on social media. I'm all over. Spend a lot of time on LinkedIn. I spend a lot of time on Instagram. So if you want to find me, either of those are great places.
All right. And we'll put that stuff in the show notes so people can find it easy. Thanks again, Kent. It's been really great having you on.
Yeah. Thanks, Adam. Thanks, Kevin. It's always a pleasure, guys.